The Federal Reserve's actions are in direct relation to what is happening in the stock markets today. And you can see this extending out further into Europe and Asia as the markets of all where there is intervention are experiencing volatility. Before I get into the central theme of my video today, I just wanted to say hello to all of you, just to say, it's good to be out here to put my face out there and just to say hello to you and to ensure that, you're really getting this information, you're passing it off to your friends and family, make your own videos, talk to your friends and family is so important right now, especially at this time. So I wanted to continue on and just say that the BIS, or the Bank for International Settlements, sits on top of all of these central banks. And they are considered to be like a central bank of central banks. So they are actually the ones who calculate the amount of derivatives. I quoted them in my book, saying that there are 1.5 quadrillion in derivatives. Now this number, of course, sometimes they say it's 700 trillion, sometimes they say it's 1.2, 2.2. I've heard many different numbers. However, it's far greater than the amount of GDP in the world. So in my book, I quoted, for example, 25 times greater than the actual GDP of the world. But think about this for a moment, that the GDP numbers are all fictional anyway. So you're looking at least 25 times greater. So it's an amount that cannot be paid back. It is extreme levels of debt, and they will undoubtedly crash this whole system. They'll use those derivatives to hold us hostage, to bring in a new currency system. That's what they will do, undoubtedly. That's something I've been researching heavily. So now to go back to the central theme of the video, I would like to still continue on with looking at the volatility in the markets. And I am seeing that the Federal Reserve's actions are directly in proportion to what the stock market does. So you look at the Federal Reserve's balance sheet and you see how it is a direct relationship. As the Federal Reserve's balance sheet is increasing, you're also seeing the stock market increasing. If they decide to pull back on the QE that they're doing, it is undoubtedly going to bring a fall, a crash. They're pulling the crutch. What do you think is going to happen? The market can't be sustained like this. And the market right now is really worried about low interest rates, because if they start to bring them up just a little bit, it's going to mean a massive increase in the amount of interest payments that the government has to pay. It's going to be a big problem for the homeowners out there. It's going to be a huge problem all around the world, in fact. So this is something that the market can't sustain. If they do actually increase rates, they won't do so in a dramatic way. If they do bring it up to a substantial level, it's going to collapse the market. That's why the most important thing, if you get anything out of this video, please understand this. The most important factor, the most important indicator of a market crash is going to be those interest rates. Watch them and look at them, and when they go up, we know that they're ready to crash this market, only to bring in the solution on the other side. That is order out of chaos, ordo ab chao. That is the Freemasonry slogan there. But I wanted to just tell you, look at the interest rates, keep an eye on them, and that is the most important thing. Watch the volatility increase, and then they come out and say that, don't worry, we'll save the economy, and then they perform a certain action, undoubtedly making things worse. If you really like this video, don't forget to give me a thumbs up. It really helps me out a lot. Thank you to each and every one of you with all your comments, all your positive messages. This was a lot of effort that I had to put in to do the research, and I appreciate all those comments I get all the time saying thank you for your work and so on and so forth. This is something that I really, really do appreciate. It helps me to continue on with this. If you're not already an insider, please get on there. In fact, the latest email I just sent out is about the Money GPS strategy, where I discuss how to get away from this system altogether, and we can stop really looking at this system as trying to make more and more money when we know that they're devaluing that currency over time. And now it's becoming more and more rapid. So why not get ourselves out of the system as much as we can, and we can help ourselves out. Take care, and I'll talk to you soon.